This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on April the 4th, 2019. Our time is 7:05 a.m. Mountain. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. Numbers this morning: US dollar at 97.22, Canadian dollar 74.88, the pound at 131, the euro at 112, gold at 1292.70, silver at 1513. Gold silver ratio is about 85.5. Platinum 871, palladium 1389, WTI 62.73, Brent 69.68, nat gas 276. Also Bitcoin in US 5,011.20. It really jumped up. Bitcoin Canadian $6,694.49. The Dow at 26,218, S&P 2873, Nasdaq 7,895, TSX 16,279. And Harold, you were 100% right about platinum and palladium. We saw palladium continue to pull back, and platinum has been gaining.
Yeah, that was almost a no-brainer. Again, when platinum hit 800 and palladium hit 1600, it just couldn't stay at that level. So now palladium's down to 13 and change, and palladium and platinum this morning hit close to $900. It hit 892. So, on our paper trade, we picked up $92 this month so far on platinum, and palladium dropped from 1,600 to 13, so it dropped about $250. So again, we're not advocating trading these markets. If you were going to buy platinum at 800, we suggest you bought it, physically. Don't trade the futures market or, anything risky like that. But it's looking like it's turning out to be about the only trade in the market at this point that made any sense. And again, we've seen about a $100 move so far in platinum. Now, the gold market came down quite a bit this week. We hit as high as 1325. Everybody was getting excited. Again, our stance on gold is that if the US dollar is strong and there's no outside situations affecting the market like a potential Trump, situation with Mueller, but that's all gone now. So the fact is that there is no further probes through Mueller. So the market has moved back up a bit. The dollar has strengthened and gold has dropped back down to 12.95. So again, unless the US dollar weakens tremendously, which I don't see happening at this point, I see gold falling further. So that's why I continue to give you those numbers, that 1380 is the important number for gold. And, there's been times that we've been tempted to jump into the market because the geopolitical situation or the situation looked good for gold, and you do like to try to, buy the rumor, sell the fact type of thing. But as far as gold goes, unless it technically breaks those areas, I'm not a buyer or a seller. So basically, we're just sitting there waiting for that market to give us opportunity. Now, again, with a gigantic debt of $22 trillion in the market, that's a reason to watch the gold market. But at this particular point, as long as that isn't an issue and it isn't affecting interest rates or anything like that at this time, again, it's not an issue that's affecting gold. So gold should trade in a range. I don't see it breaking out at this point. I know a lot of other analysts were very bullish on gold and we're buying it. We're not buying gold until it breaks 1380 and closes twice above that number.
Connect with Harold at rarecoloreddiamonds.com. We'll talk about diamonds a little later in the podcast. There was a white diamond that sold at auction for a very nice price. Harold touched on the U.S. debt. The United States is on a path to financial ruin, according to Michael Schneider via the End of the American Dream blog. Everyone can see what is happening, but nobody can seem to come up with a way to stop it. According to the U.S. Treasury, the federal government is currently $22 trillion in debt, and that represents the single largest debt in the history of the planet. Over the past decade, we have been adding to that debt at a rate of about $1.1 trillion a year, and we will add more than $1 trillion to that total once again this year. But when you add in our unfunded liabilities, and this is something we touched on the last podcast, our long-term financial outlook as a nation looks downright scary. According to Boston University economics professor Lawrence Kotlikoff, the United States is currently facing $200 trillion in unfunded liabilities, and when you add that number to the $22 trillion debt, you get a grand total of $222 trillion. That coming from Michael Schneider. That is a scary number. There's a retirement crisis in the United States where most will be unable to afford a solid life. The three legs of retirement, private savings, pensions, and Social Security are all in dire shape. At Vanguard, the median 401k account value for an investor age 65 and older is a measly $58,000. After looking at the data, the St. Louis Fed concluded it could be worrisome that for many American households, the total balances of their retirement accounts may not be sufficient to ensure a solid life in retirement. And Sam Dongan, he has a blog, it's called Financial Samurai. He lives in San Francisco. He spent 13 years working on Wall Street, negotiated his layoff and severance package in 2012. He has a wife, family. He says in order to live comfortably, to raise a family in a coastal city like San Francisco or New York, a household has to earn at least $300,000 a year. And we remember from the past, talking on our podcast, that even if you were making $400,000 in San Francisco, you could not afford a home. Real estate, childcare expenses, food, entertainment, car payments, and student loans can add up very quickly. He has done a calculation and says $300,000 a year would bring maximum happiness if you were living in San Francisco. Harold, if you just take a look at all those stories we mentioned and all the numbers, reality just does not add up with the dream. It's just that simple.
Yeah, those are scary numbers. I don't know where he got to that $220 trillion, but $20 trillion on its own, is quite severe. But we've known that, the retirement situation in the U.S. is going to be an issue. The baby boomers, it really started in 2008 when the market plummeted and really took away so much of people's money, and they were afraid to get back into the market. So many of the baby boomers and the middle class never got back into the market, especially at the bottom. When it dropped to 6,400, everybody was still petrified to be in the market at that time. So you had the people with money and you had Wall Street insiders and that type of, investors going back into the market, and they made a lot of money. But the middle class and a lot of the baby boomers just never participated. So the fact is that the retirement picture is going to be bleak. It's going to be very, very difficult. Most people own homes, and that's really where most of their savings are. But the real estate market is not that strong either. So, it's a really difficult situation because you don't want to go into the stock market at 26,000, along with the fact that the majority of people that trade stocks lose their money. So it's a gambling risk. So it's not suitable for most people. Trading commodities on your own is not suitable for most people. Where do you really put your money, and how in the world are people going to retire? I think at this particular point, it's going to be extremely difficult. I believe last week we had an article a report in the newsletter that said that the majority of Americans don't have $10,000 towards retirement. So the picture is bleak. It's that way all over the world at this particular point. In the United States, things seem to be going better than most other countries, even though the U.S. has its issues. Canada's got its issues at this particular point, and the potential of a declining dollar. We could see the dollar drop down to 71 cents. We could see the dollar drop down to 62 cents. A 62-cent Canadian dollar would be detrimental. It would be a very difficult situation for us Canadians to overcome. It'd make travel very difficult, and buying anything imported very difficult. So, Canada's not in great shape. The oil market's not doing extremely well. And then we talked last week about the situation with China, where because Canada did a solid for the United States and arrested a Chinese diplomat all of a sudden China has canceled all of the canola oil sales from Canada, and that's in the billions of dollars, and that's extremely hurtful. So, it's a very difficult time. You got Brexit in Britain. You've got Europe not doing well. Just look at the price of the euro and the British pound. Um, it's just a very, very difficult time at this particular time, and it's very difficult to make money in these markets. Again, the stock market is in a range and at a very high price, so it's very difficult for somebody to jump into the market at this particular point when there's so many analysts out there that are putting out warning signs saying that the stock market could crumble. Again, you've got the gold market, which was making a nice move, got into the 1300s, looked like the market could possibly take off, and now it's back down to about, 1290. So, again, at this particular point, as much as I hate to say so, the right thing to do at this time is just to sit back and let the markets come to us, because to jump into a market in a desperate situation to try to make money is definitely the wrong thing to do. My suggestion is just to sit pat and wait for the market to give us an opportunity, whether it's in gold and silver or whatever. But I'm saying at this time, most of the markets are trading in ranges because nothing is really happening geopolitically or financially in the markets that are bullish for any market.
Let's get an update on the Chinese situation and Brexit. There continue to be signs that progress is being made at trade talks between the United States and China in Washington this week. Now, later today, Thursday, the Chinese Vice Premier, he will meet with President Donald Trump in the White House with the goal over the next few days to reach an agreement on core issues, which would allow a signing ceremony between Trump and China's president. Drafts of the agreement give China until 2025 to meet commitments on commodity purchases and open the way to full takeovers of its companies by U.S. bidders. For the United States, trust remains an issue, while authorities in Beijing are keen for a breakthrough to help turn the economy around. Now, Brexit is just a disaster. Well, agreement not to do something. That is it. Last night, lawmakers in Westminster passed by just one vote to block a potential destructive no-deal Brexit. That means that if a stalemate on exiting the European Union persists until the April 12th deadline, the Prime Minister, Theresa May, will be forced to ask the EU for a long extension to the process, with some members of the bloc still opposed to that, and Conservatives in London not happy about holding EU legislative elections. There remains little clarity on what the eventual outcome will be. Pound traders, though, they reacted positively to the vote, but without exuberance. Harold, geopolitically, when it comes to Brexit, as we touched on the last podcast, that is just a mess. They literally cannot make a decision if their life depended on it.
You bet. And it's really going to affect their currency tremendously and their economy moving forward, because you're in limbo. You don't know what to do at this time. And the British pound, don't forget, at one time, the British pound was worth double what the US dollar was worth. And now, it's about a third higher. So the British pound, which has always traded much, much higher than the US dollar, is just not doing well. And if Brexit turns out to be a total disaster, look for the British pound, to fall below 110 or even par. So it could be quite scary for Europe because the euro will follow suit. So it's just a very, very difficult time. A lot of it stems back again, to 2008, which was the last major financial disaster that happened, initially in the United States, but spread to the rest of the world. With the banking crisis, with the mortgage crisis back then, they had these liar's loans, and the real estate market was on fire, and banks and mortgage companies were basically giving out loans to people without even checking their credit. And basically, they packaged these loans and sold them overseas to foreign investors. So everybody shared in the mess that was the mortgage crisis in the United States. So that definitely affected everybody and is still affecting these countries, because nothing really has been done about that debt. It's just been swept under the rug and carried as an expense. But the fact is that as interest rates were going up, it was affecting the bottom line tremendously because, debt on $22 trillion, even if it goes up 0.5% or 1%, is substantial, especially when not a ton of money is coming into the country to offset that debt, along with the fact that we're not getting along with China, and China is the biggest buyer of the U.S. debt. So at this particular time, Randy, it's really a very, very difficult time, which again, on this show, we've made, strong recommendations in the past, and our track record has been excellent. But at this particular point, again, all these markets are in limbo, and there's very little opportunity to make money in these markets without taking a huge risk, which is something that we just don't advocate.
Connect with Harold at rarecoloreddiamonds.com. We'll talk about diamonds very soon on the podcast. The Dow is up more than 11% this year, while the S&P 500 and NASDAQ have surged 13% and 16.5% respectively. The TSX is up 12%. But Harold, we saw that last year. At the beginning of 2018, things were fairly strong, and then there was a very bad ending to 2018, where the markets took a hit very hard. So I would suspect, because we're getting a lot of warnings about recession in the United States, that there could be some rough rides ahead for the stock markets.
Well, definitely could be. The areas that concern me the most right now, first of all, are retail. There's so many stores closing down, and that's got to affect the commercial real estate market in a huge way, because if the mom and pop shops can't make it, if the major department stores and those major conglomerates can't make it, what chance does a small mom and pop shop have to make it? So, Amazon and companies like that have made a huge dent in the retail market. So many brick and mortar stores are closing down. Tens of thousands of people are being let go. On top of that, you've got McDonald's and other companies starting to deal with robots and that type of thing in their stores. That's really going to hurt the employment numbers. So I just don't know where this is going to. I don't know where all these new jobs are going to come from when, in essence, through the retail closings and other issues, I think that there's going to be less and less people working. So I think that's got to affect the bottom line tremendously. I think that the stock market cannot fare well with the present situations because, again, there's just too much risk out there, and there's too many things that are holding the market back. Now, again, the market got good news when Trump wasn't when he got out of trouble with Mueller. So that's why the markets rallied in the last week or so. But it's not that the U.S. is doing that great. It's just that the U.S. is doing better than other countries. So with the Brexit situation, for example, you're going to see a lot of more European money coming into the U.S. market because they're afraid of of investing in the European markets. So the money comes into the U.S., which is sustaining the market. It's not that our economy is doing so great. It's just that our market is doing better than European markets, and that's where a lot of money is coming into. The other situation that is a concern, and we really have to look at this strongly right now because we've seen this in the past, is that when the Canadian dollar really falls substantially, like it could do, like it could drop down into the mid to low 60s, you're going to see a lot of foreign investors coming in and buying up Canadian real estate. That's happened before, and it's definitely going to happen again. There's no way that the prices in the major parts of Canada, like Toronto, for example. Now, there have been situations a few years ago when there's so much foreign money coming in and buying all the top-notch real estate in Toronto and in Vancouver that the government put taxes and that type of thing on it. But I think that if the dollar drops down into the mid to low 60s, I think that we're going to see a run on Canadian real estate again with a lot of not so much European, but mostly Asian buyers coming in and buying up all the prime real estate in Canada, which again, I think is going to be an issue moving forward.
Private payrolls added just 129,000 in March versus an estimate of 173 according to ADP Moody's Analytics. The job numbers come out tomorrow. The official numbers from the U.S. government, we'll have to see what happens there. For the first time in 8 years, small businesses cut jobs 2 months in a row. That's the first time that's happened in 8 years. 13% of the world's companies are zombies. That's not healthy. The past decade of ultra-low interest rates has spawned the rise of zombie companies. These debt-laden firms don't make enough to cover their interest payments. That is not a good sign for the world economy. A retail apocalypse? JCPenney, Payless, Lifeway announce 3,000 plus combined store closures. In the post-digital era, only the strong will survive. And you're seeing closings on a regular basis. Even Walmart is shutting down some of their stores. Weak February U.S. retail sales underscore a slowing economy. Christine Lagarde, global economy is in a delicate moment and losing momentum. She is the head of the IMF, concerned about a lot of the world's issues, Brexit, Chinese trade tensions, says that we're in a time right now where growth is losing momentum. That is a concern for pretty much the whole globe. Harold, you see all these stores shutting down. In fact, online shopping officially overtakes brick and mortar retail for the first time ever. The report from the U.S. Commerce Department this week shows a new milestone for online shopping. The total market share of sales done with non-store retailers or online was higher than general brick and mortar sales in February. The days of the internet and online shopping being just a fad have come a long way over the years. You can see what's happening, Harold, and I agree with you. Now is a time for caution, and it is very scary out there.
I mean, just listening to the reports that we're talking about today, you would wonder why in the world anybody would go into the stock market with, 3,000 stores closing. I mean, when Walmart starts closing stores, you know that there's an issue. Dollar stores are not doing well, so you know that there's an issue. The other thing is that with this trade sanctions against China, how, if they did settle their issues, how long till they gear back up again for business? And how do you make back the profit, the losses that you made by not being able to deal, for this period of time? I mean, your business gets interrupted because of a decision made by President Trump. Okay, he made this decision. He's the one that felt that the deal wasn't good enough. He's the one that went in there and changed everything. If you were to ask most of the U.S. companies that are dealing with China, and they have been for all these years, they're comfortable with their dealing. Of course, they would like a better deal, but they're not going to stop doing business and ruin their business, just because they want a better deal. They've dealt with it. They've priced their products accordingly in order to deal with what their cost is. And now Trump comes in, causes a controversy. All of a sudden, these companies are not able to continue to do business, and then they close down. So then you lose your business. The employees all lose their jobs. What benefit is that whatsoever? Because he felt that the deal wasn't good enough. So it's going to be interesting to see what happens when these elections come up, because you've got a ton of people out there that despise him, but then you've got a lot of people that respect him. It's going to be a very, very close call. When you look at the Democrats, you've got the entitlement group, the people the millennials that think that the government should be taking care of them and taking care of, all of that. It's just going to ruin this country. It's just going to absolutely ruin this country. And I don't know how good of a job Trump is really doing, because so far, nothing tremendous has changed here. He's fighting for his wall. He's going to close the border from Mexico to the United States. I mean, that would cause so much loss of business. It's not even funny. Now, again, I respect the guy for trying to keep his word and doing everything he can to keep his word. But on the other hand, you don't do it at the expense of ruining and hurting the country. So, there's something he's got to give in that area. And then something has got to give as far as China goes, because I know for a fact that there's companies in the United States that are almost out of business because of the tensions with China and the fact, that these trade tariffs and their relationships have changed in business. So, again, it is very possible that the stock market could fall substantially. We know that we've talked about it before, a plunge protection team, but that's only good under certain circumstances. When you get mass selling, when all of a sudden the situation turns so negative that you get mass selling in the market, a plunge protection team cannot save that. We saw that in 2008 when the market dropped from 14,000 to 6,500. When it gets negative like that and you get massive, massive selling of the hedge funds and of the mutual funds and things like that, it's done. The market's just going to crumble. We've seen it happen before. We've seen it happen many times before. At 26,000, where could the market actually fall to? At 14,000, it dropped all the way to 6,500. It dropped to 6,500. At 25 or 26,000, could it drop to 15,000? Of course it could. It could drop right back to that number. But it would take a lot for that to happen. With all these store closings, it's a very concerning situation with 3,000 stores closing, and we've had a lot more stores closing than that. I would say that there's problems, and it's going to be very, very difficult to correct it.
U.S. President Donald Trump threatens to close the southern border. Mexico, they take care of the world when it comes to avocados. Avocado prices jumped 34%. Biggest one-day gain in a decade. Mexico, the biggest supplier of the fruit, accounting for 75 to 80% of U.S. consumption. Action, reaction. Let's talk about diamonds. It was a very good week for diamonds. Herald's website, rarecolordiamonds.com. 88-carat flawless diamond brought in $13.7 million at Sotheby's, Hong Kong. Just a beautiful diamond. You can see a picture of it in our free weekly newsletter, the size of an egg. Connect with Herald to get our free weekly newsletter. The D-color type 2A oval brilliant gem was the top lot in the sale of 200 items that featured a variety of diamonds, fancy color diamonds, statement gems, and signed jewels. A Japanese private collector purchased the stone and named it the Manami Star after his eldest daughter. So we have another renaming of a diamond in a daughter's name. I love that. 88.22 carats. What a beautiful diamond. 13.7 million. We do have auction results in our free weekly newsletter. Some of the auction results that caught our attention. Lot 1780, fancy gray blue diamond and diamond ring, set with an emerald cut fancy gray blue diamond weighing 5.20 carats, embellished with brilliant cut and baguette diamonds mounted in platinum. The estimate was $229,000 to $357,000. The lot sold for $1,277,000, $513. That's a big number when you have the estimate at around $200,000 to $400,000. Lot 1784, fancy intense green diamond and diamond ring, set with a round cornered square modified brilliant cut fancy intense green diamond weighing 3.05 carats between two shield shaped diamonds mounted in 18 karat white gold. The estimate on it $625,000. It sold for $757,069. We love green diamonds. Lot 1613, a diamond ring. Now this diamond ring to me looked like it was yellow, but they did not classify it as yellow. If you looked at the picture though, it looked yellow to me. Anyway, we won't say it's yellow, but it is a diamond ring set with a cut cornered rectangular modified brilliant cut diamond weighing 11.10 carats. Now the estimate on it, and this is what Harold had talked about on past podcasts, for those that are invested in diamonds around 25, 50, 75, 100,000, the estimate $45,000 to $61. It sold for $223,230, a very good number. And then finally lot 703, fancy colored diamond and diamond ring, centering upon an oval fancy grayish blue diamond weighing 0.41 carats, flanked by an oval fancy intense yellow and fancy pink diamonds weighing 0.41 0.51 and 0.40 carat respectively, decorated with brilliant cut diamonds. The estimate on it, $33,000. It went for $57,402. So Harold, that verifies what you talked about on a past podcast. These diamonds that are not the multi-million-dollar diamonds selling at very attractive prices.
Yeah, those are great prices to hear. I mean, obviously an 88 karat D flawless type 2A diamond is almost a one of a kind. They're spectacular, the size of a golf ball. They're just absolutely amazing. Very, very seldom does a diamond like that ever become available for auction, and that was an excellent price on it. But you're right, these smaller diamonds go up also. So you're looking at, diamonds that were supposed to sell, in the in the 50, 60,000 range and selling for, 30, 40, 50% more than that. I love those type of numbers. And the gray blues, surprising that diamond sold for 3 times what the estimates were. Not that it isn't worth it. I'm just saying that it's not that the auctioneers and the appraisers of these diamonds don't know what they're talking about. It's the marketplace. How can they say that a diamond's worth $250,000 and it sells for over $1 million? It's just because of the times and, where people today feel comfortable putting their money. You put your money into the stock market, it's a scary thing. The market can drop 50% and you could lose all of your money on certain stocks. But that will never happen in a diamond. A diamond always has value to it. The thing is that when we were talking about Europe and Greece a few years ago, when Greece was in trouble and all the banks were shut down, and people couldn't get to their money, if you had a diamond, you could always sell that diamond, cross a border and get money for it and get back into the game. Diamonds have always been that type of asset. The reason that I brought diamonds to the forefront, many, many years ago was because I felt that the Canadian dollar, and a lot of my clients are Canadian, I felt the Canadian dollar was going to fall substantially, and that's exactly what it did do. It dropped down into the 60s, and it was even with the U.S. dollar. So we bought diamonds when the U.S. and Canadian dollars were even. Now, the Canadian dollar is 30% less than the US dollar. So the diamonds have gone up in value, but the currency alone has given us a 30% profit. And if the Canadian dollar goes to 62 cents, as it very easily could, then you're talking that you're going to pick up, almost 50% return on the currency, and that's a really big deal. That's one of the major reasons for owning an asset like a diamond is currency devaluation.
Connect with Harold at rarecoloreddiamonds.com. If you would like to get those auction results, we'll be happy to send them out to you. At the end of our podcast, a couple of interesting notes. A 17,000 bottle wine collection sold for nearly $30 million over the weekend at a Sotheby's auction, according to Bloomberg. The collection exceeded its estimate sale price by almost $4 million. Also, if you love watches, there's going to be a watch on sale May 11, 2019. It's a 1930s Vacheron Constantin minute repeater with retrograde calendar. The estimate on it, $400,000 to $800,000. And this is a very rare watch that will be much coveted. Harold, hard assets continue to do well. We see it with watches, wine, art. You have even handbags, cars. It's just a real good time to be in that hard asset market.
It certainly is. Again, they're longer term investments, so they're not, as easily tradable as stocks and commodities because they don't trade on an exchange. But again, when you buy quality, you're going to do well with it. And again, I'm a firm believer, especially in a marketplace like we're in right now, where there's tremendous danger in the markets, that one day we can wake up and find the market down 1,000 points and then people scrambling to get out. I'm not a big buyer of stocks. I haven't been since 1999 when I saw what happened with the NASDAQ and all that. I've been in the investment business, for half of my life. So I'm very conservative and feel much more comfortable owning hard assets than I do, day trading stocks or things like that. So my best recommendations for now, with the marketplace the way that it is just to sit still. Don't speculate in markets that are uncomfortable for you. Never leverage your positions, because leverage works for you and against you. It's all well and good when the market is going your way. But when the market reverses and goes opposite, that's where the problems are. So again, at this particular point, I would stay very cautious. I would not be speculating in these markets, definitely not trading on leverage, and continue to listen to the show and wait for opportunities because, again, you don't run to the market. We let the market come to us.
Thank you very much, Harold Siegel, for your knowledge and another podcast.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com. If you would like the auction results from the most recent auction out of Hong Kong, we'll be happy to send them to you. Just connect with Harold at his website. That's it. Another edition of the World Financial Report podcast. For Harold Siegel, my name is Randy Marshall. We will talk to you next week.